even if we manage to pull that off, and that's saying something, the real question is, who are we selling this to?
Same people we've been selling it to for the last 2 years, and whoever else will buy it.
Some of you may remember this iconic scene and dialogue from the movie Margin Call. In this scene, they're discussing selling securities to buyers who supposedly don't know any better. If you believe everything that has been said and written about Lenskart in recent days, given its IPO opening, you would think that this is actually what happened in their meetings, in the meetings between the Lenskart operators and the merchant bankers and whoever else is involved in that entire transaction. Right off the bat, I want to say I don't have a particularly strong view on the IPO or the business of Lenskart. I am not subscribing to the IPO. I don't generally participate in IPO, so it's not something I pay much attention to anyway. I just thought that given everything that's happening, it would be a good time to talk about IPOs generally and the Lenskart IPO and figure out what's going on and how people should think about this. Now, everybody knows that the PE multiples are astronomically high at about 230, 240 times trailing, and there's a lot of ink that's been spilled talking about how those earnings are actually based on one-offs and some sort of financial maneuvering to make things look better than they are. Again, like I said, this is not something I've paid much attention to, so I'm not going to get into how they manage that and whether it was the right thing to do or not. And you'll see with most IPOs, especially IPOs from the quote-unquote new age companies that come out, they now tend to show some amount of profitability in the year or two leading up to the IPO to make it seem that sort of things have turned and that the days of endless burn are behind them. I want to leave all of that discussion on valuations and all on the side for a minute and just talk about how investors should think about investing in IPOs, whether it's Lenskart or anyone else. You have to understand that when such companies go public, it's the job of the promoters, the shareholders, and the merchant bankers particularly to make companies look good. It's often sometimes cynically referred to as window dressing. But the point is that in order to create demand and interest in an IPO, you have to do these things. That's why you'll see, especially in the high-profile ones, you'll see the promoters coming on every business channel, podcast, doing tons of interviews, both in business media and media in general, in the weeks leading up to the IPO. That's all standard. Everybody does this. There's nothing unique to what Lenskart and Piyush Bansal and anybody else connected to the company has done in this regard. The thing with IPOs, though, is given that it is, generally speaking, the one major time in a company's history where the sellers are actively marketing their wares to potential buyers, they will go out of their way to make things look good because ultimately they have something to sell. This is just capitalism working the way capitalism does. Nobody's doing anything illegal. Nobody's coming out with a goal to hurt anyone. This is just how things work, and this is the system that we've chosen. What I will say is that a reason a lot of very savvy investors historically have stayed away from IPOs is this exact reason, that in a situation where somebody is actively coming and selling something to you, the odds of that security being underpriced they're infinitesimally low. It's just highly unlikely that that's going to happen. The only way that happens is if there's some complete misunderstanding of the market's demand for that company or for that business, which is, again, highly, highly unlikely, especially in these high-profile, very large companies like IPO. Very large IPOs like that of Lenskart's. I want to add here that I think investors have, to a large extent, learned some of the wrong lessons from particularly Zomato's case, but I think some of the other high-profile IPOs post-COVID as well, where there's this idea that these companies can list at these supposedly very expensive valuations. Again, I'm not commenting on whether it is expensive or not. Everyone can decide for themselves whether that's the case. But they come at these valuations, and at some point, if you've bought and it goes up, great, you made money. But even if it falls, eventually there will be this magical price at which there is tremendous value, because the natural human instinct is, if something has fallen 30%, 50%, 70%, it has to be the case that there is tremendous value. And so therefore, if you remember from Zomato's case, when it fell to that magical 40 number, and that 40 number had sort of got a life of its own, because famously Professor Damodaran had valued Zomato at that price. And when it finally hit that, there was so much discussion and frenzy around whether that's, whether Zomato has hit a bottom. And I mean, coincidentally, that was broadly where the stock bottomed out and went up. It's gone up, 8-9 times since then. But I think the lesson that a lot of investors have learned from that is that is essentially how all these new age IPOs will play out. That they'll come at certain valuations. You can either choose to try and profit from some amount of listing gains or short-term gains, but the real play is that eventually these things fall, and then you get them at these values. And just because they've fallen 50% means they're cheap, and then you can very quickly make a lot of money. Now, of course, there will be cases where that happens, but it is incredibly foolish to think that that's just how all of them will play out. That simply cannot be the case. You have to take a call at every single price point, whether or not it makes sense to own that company. And ultimately, whether it's an IPO or some company that's already been listed for 50 years, you're still making the same investment decision. You're still taking a call that based on your assessment of that underlying business, on your assessment of the future of that business. And ultimately, what it really boils down to is your assessment of the future free cash that that business can potentially generate, discounted at a fair discount rate. Are you getting value for what you're paying? It's that simple. Forget what anybody else is doing, what anybody else is saying, what anybody else isn't doing or isn't saying. It doesn't matter what you think of Piyush Bansal. It doesn't matter whether what you think what he's done with his own buying and selling of Lenskart shares, whether that's right, wrong, good, bad, or ugly. It does not matter. All that matters is if the share price, if the IPO is coming out at 402 rupees a share, based on your understanding of the financials of that business and the potential for that business as you see it to generate free cash flow over time, over the lifetime of that business. Is it worth spending 402 rupees to buy a share of that business? It's that simple. Forget all the noise, forget what everybody's telling you and whether he's right, he's wrong, whether the other investors are doing their job, whether the merchant bankers are doing their job, whether the regulators are doing their job. None of that matters. And if you believe that it is worth that, go ahead, subscribe. If you don't believe it's worth that, don't subscribe. It's that simple. Just because an IPO comes to market does not mean A, that you have to participate, or that you even have to have a view on that company or that business. Just think of how many companies, how many businesses exist as listed entities, and how many are currently coming and how many will come in the future. You don't have to have an opinion on every single one of them. You don't have to put your money where your mouth is in every single case. And I just want to add that I'm sure many of you have seen a lot of posts, a lot of WhatsApp forwards, all sorts of messages all over social media. A lot of them, at least the ones that I've seen, have been extremely critical of, I think, Piyush Bansal in particular, and especially sort of what a lot of people see as a sort of let's call it a less than ideal way of dealing with questions on valuations and sort of maybe not showing public market investors the respect they think they deserve. What I would say to that is, again, going back to my original point, that none of this matters. Ultimately, the only thing that matters is the business and what you think the value of that underlying business is. But beyond that, what I want to say is that it's his job. If he was able to buy shares at a certain price, less than a year back, and can now sell it for many multiples of that's his good fortune, that's his destiny, that's his whatever you want to call it. That's not the reason why you should or shouldn't subscribe to something. It does not matter what anybody else has or hasn't done, who's selling, who's buying. Another thing I want to add is that, there's a lot of people and a lot of opinions that go into these decisions. It's not just one man, it's not just one king in the castle taking the call. There's merchant bankers involved. There's very long, detailed conversations bankers have with various stakeholders in this process over a long period of time to ultimately arrive at a price that they think works. And if you look at the data, I think it's something like 70% or something in that region of the proceeds of the IPO aren't even going to the company. They're going to selling shareholders, many of whom are sort of long-term investors in that company. So one, they probably more than even Piyush Bansal have an outsized interest in squeezing as much out of the IPO as they can, because their goal is to make as much as they can, and then therefore whatever residual stake, if any, that they have once the company is listed, the importance of that actually declines relative to what they make in the IPO itself. So there's a lot of voices that go into making these decisions. It's not just one person, and there isn't one person to either applaud or blame in these situations. As an investor, if you're doing it yourself, you only have yourself to applaud or blame depending on how things go. If a fund in which you've invested goes ahead and invests in these, if you think it's such a bad decision, don't invest in that fund. Nobody's put a gun to your head and forced you to invest in that manager. So if you think that there are managers who are avoiding issues of this nature, maybe he or she is the one you should be going with and not the one you currently have. So what I'm trying to say, ultimately my larger point is that this is capitalism at play. In an IPO, there will be many stakeholders who will do everything in their power, and they are incentivized to do everything in their power to make the price as high as possible. They don't owe you, the investor, anything. Their goal is simply to earn a profit on an investment they have made at some point in the past, and they want to maximize the profit they make from that. In the same way that if you bought a stock that's listed and for some strange reason it goes up, maybe more than even you think it should, do you owe anyone an explanation? No, you just take advantage of it. That's why the market exists. There will always be extremes. There will always be things that you think shouldn't happen but do. That's just the nature of the beast. And your job as an investor is simply to make dispassionate calls on whether or not you want to participate in an individual security, in an individual event, or an individual corporate action, or whatever the case may be. Nobody is forcing anybody to do anything. And what I will say in conclusion is that in a lot of these IPOs, especially these blockbuster IPOs that have made headlines, in the run up to them, they actually lose their importance in the news cycle very, very quickly. I can think of, just off the top of my head, I can think of the Tata Tech IPO, for example. People were climbing over themselves to get some sort of allocation in that. The company lists, and since the listing, I can't really recall anybody talking about it. So what happened? Where has all that interest gone? So I'm saying my larger point is, it's an interesting thing to talk about. It's a sort of event, there's news, it's the thing to talk about in the market today. Don't lose sleep over this. You want to subscribe, don't want to subscribe, don't subscribe. My ultimate overarching point in all of this is nothing specific to the Lenskart IPO. The odds that the single or the most or one of the most undervalued securities you can find in a market is going to be the one where people are actively selling it to you, it's just highly unlikely that's going to be the case. If you want undervalued securities, you are almost always way better off looking at companies that have already listed in the market that for whatever reason are not trading where they should be trading. That is your job as an investor, to find those companies. Don't lose your mind worrying about whether some founder has made money or not, and whether what you think he's doing is right or wrong, and whether you like his answer in an interview or you don't. None of that matters. Your life is not changing based on any of that. Focus on where you can actually make money. Focus on where there's very serious dislocations in price and value that you can profit from. And I think that's ultimately what matters in this. Like I said, I am neither a fan nor a critic of Piyush Bansal, of Lenskart, of anyone or anything connected to the person or anybody else or the company. Like I said, I don't generally subscribe to IPOs for the reasons I've explained in this video, and that's really what I want to say. I think the one prediction I will make in all of this is that next week, once the dust has settled in about a week, 10 days time, when the stock is trading, people will suddenly lose interest very quickly in this, And what I will say is that in events that polarize people to such an extent, one half of the people, whether it's the fans or the critics, one half will say, I told you so, based on how things go, and the other half will very quickly move on to the next prediction. But the point is, none of them are coming to save you if things don't go the way you thought they would. There's a lot of value in making predictions, and as we have learned and as history has shown, the best way to seem like a soothsayer is not to make great predictions, it's to make many predictions, and eventually one of them will be proven right, and therefore you look very smart in that moment. So don't worry about what anybody else is saying. Just focus on what you need to do. You look at the fundamentals of that business, in this case Lenskart. Make an assessment of the underlying business, what you think about how that business is going to pan out over the next 3, 5, 7, 10, 20 years, and decide for yourself whether that future that you envision is going to generate the free cash required to justify the price. And maybe you may come to the conclusion that the price is way less than it should be. Maybe there is a vision you see where even at 400 rupees, it's extreme at 240 times and 10 times sales or whatever the multiples are. It's actually cheap. Maybe that's a conclusion you come to, in which case you should subscribe. But all I'm saying is that do not get blindsided by any noise, by what anybody else is or isn't saying. Focus on what you have to do. Focus on where you think you have the edge. And if in an IPO, it's generally quite unlikely that, especially in these very high profile ones, that retail investors would have an edge. So now, how does any of this affect your decision making? That's up to you. All I'll say is what I say, again, nothing specific to Lenskart, just absolutely any IPO ever, buyer beware. Thanks for watching.